So how can you use Fibonacci levels to make money swing trading? In this video, I'm going to show you how to apply Fibonacci so you can increase your profitability when swing trading. Hey, how's it going? On this channel, you will learn the steps I took to go from trading with a full-time job to trading as a full-time job. So if you're new here, consider subscribing. And hey, at any point in the video, feel free to check out the notes and links in the description below. I'll list out any valuable resources down there. Now, today we are talking about swing trading with Fibonacci levels. So first off, if you are new to Fibonacci at all, I would definitely recommend going and checking out my videos on Fibonacci retracements and extensions first, because I will assume that you know the basics of them in this video. Now, like all technical analysis, even though I am doing this on a daily chart, this applies to every kind of time frame. So either a weekly chart, or if you're a day trader and you want to put this on a 5-minute chart or a 15-minute chart, these concepts still apply. It is always important to be using other indicators or chart patterns with your Fibonacci. So for this chart of Boeing right here, a big important pattern here is a wedge pattern. Now, if you don't see this pretty quickly after looking at a chart, this just means that you should go and practice looking at charts more and be able to spot these, because just having these kind of patterns in your trading toolkit is going to increase your chance of seeing profitable trades and making profitable trades. So to quickly draw that on the chart, the wedge pattern is along this resistance level and then down here. Now, to draw a wedge pattern, you don't have to connect it perfectly. Just the idea is that seeing that the stock bottomed in this area, and then along here it bottomed, and then as well down here. It did gap down between it a few times, but the idea is just creating that overall large time frame pattern. When I was looking at Boeing and seeing this pattern, it was about in this area. So the idea with a wedge pattern, again, is you want to see it break out into a direction that you want to trade. So with the idea that we want to see Boeing go to the upside, we are going to look for this to break out of the wedge. Now, coming in here and using Fibonacci on this larger swing to use that 4-hour swing trading, we want to see the stock break out of this 618 level. Again, that is the more high resistance or high support level. And so for here, this is a high resistance level. And once the stock breaks through that resistance level, that is a really strong indicator that the stock is going to break to new all-time highs. And then once the stock breaks the 786 level, that even has a higher chance to break to all-time highs and actually hit the 1272 extension. The whole goal of using Fibonacci in this style is not to buy the bottoms. And in a lot of my other videos, I have shown ways to buy the exact bottom with Fibonacci, but this is a way to use Fibonacci for more of a continuation pattern, or really a much higher probability of trading Fibonacci. You don't necessarily capture the whole move, and it's possible to buy the bottom of these kind of moves sometimes, but I didn't see that in this chart. So this allows me to have another way to get into the trade. So if you potentially miss a bottom in a market, you want to have another toolkit and another way to get into the trade and be able to capture a huge move like this. Getting in at this point right here still allows you to capture about 80% of this move, and that is still a hugely profitable trade. You don't have to capture a whole swing to become a profitable trader. To walk you through the actual trade I did, if I go in here and I actually bought stock on this, I can show trades. You can see that I bought in this candle right here and then actually sold right here pretty close to the top. And so the whole idea again with this trade is, you're not capturing the whole move, but you know what, 80% of the move is really good. Initially, when I saw this trade, the stock had this huge run up and gone up about $30 in just a few days. And that can be kind of spooky, because if a stock goes up a ton, quite often it will have a large pullback as well. And so at the point I still saw this pattern, once it broke out of this wedge here and it broke above the 618, that's a really strong breakout pattern, but you don't always want to chase. A lot of the time you want to chase maybe a little bit. And so here I chased with a small amount that I was willing to trade. And so I wanted to buy a total of 60 to 90 shares in the end. And initially I bought 30 because the idea is, you know what, if this is just going to break out and keep going up like this, I want to be able to get in that move. I got good signals here. And if the stock breaks out here and then pulls back and then goes, I want to be able to buy some here just in case it keeps going. But I also want to be able to buy some down here when the stock has that pullback. So I'm not just having to stomach a huge pullback like that. You always want to trade with either legging in, and that's what legging in is, you know, buying one a little bit here and then buying some more there. You want to leg into a trade, especially when you are potentially chasing like this. Now, because it never did that pullback, I was never really able to add on to those shares. Hindsight, I could have added on here probably, but you know, I didn't, and that's how it goes. You are always learning as you're trading, but as the stock went up and it broke to new all-time highs, you can see that once it got to the 1272, that's when you want to be ready for the stock to potentially start pulling back. And that's when I started to have a trailing stop. And that was just a trailing stop with the low of the previous day. So if it broke here, I would have closed. And then the next day, if it broke here, I would have closed. So just to zoom in on this, you can see that once it broke the low of this high it made right here, so this low, and it broke that, that's when I closed the trade. And so that's basically how a trailing stop works, is you don't know how high this is going to go. I quite often like to hit to the 618 level because that's just a strong resistance level to close these trades out, and they can keep going too. And so that's the whole idea of a trailing stop, is you don't know how far or how high the stock is going to go. And this is a trailing stop is a good way to not leave money left on the table potentially with just being scared or fearful that the stock is going so high. Because just looking at the stock chart right here without looking at these two red candles, the stock has moved up a ton in those last 4 green candles. And that is awesome, especially when you're in the trade. But also you want to be mindful and realize that, you know what comes up must come down to a certain extent, and you don't want to lose those profits you gained. Another way you can potentially solidify this breakout is using Fibonacci clusters. Now I have a video on that, and quickly to show you just doing that on this chart is taking this swing here and then taking this other smaller swing here. And that will show you these levels lining up here. You got the 786 from this swing right here, and then the 100 level from here. So as the chart broke through this kind of cluster of Fibonacci resistance levels here, that really gives you a much stronger upside potential of this chart and allows you to, you know, again, increase your profitability and your chances of being right. The stock market is really just gambling with trying to increase the odds in your favor, and the more ways you can do that, the better trader you're going to be. To quickly show you another example to solidify this, here is another swing trade I just closed. Now this is again a daily chart, and using the Fibonacci on this major swing that we have right here. Now you can see that the stock bottomed from these 2 candles, and that is a pretty strong candlestick pattern for seeing a bottom. Now once the stock came up to this 1618 level, you can see that it kind of bounced around here for quite a while, and that can be a strong indicator that the stock is just sitting there consolidating at resistance. Now the idea is once it breaks through that resistance, it's going to start going and potentially hit all-time highs. Once it began to break out of this, the stock then broke all the way up to the 618, and that's about where I closed out, and now it's still chopping around and looking like it wants to keep going up. The whole idea again here is we didn't buy it at the bottom, and that's really hard to do a lot of the time, but we were able to capture 80% of the move and you can still make a ton of money just doing that over and over. Another key indicator I like to use in these swing trades is this squeeze indicator, and that is this indicator down here. Now what this shows is when the squeeze is in these red dots right here, that shows you that the stock is consolidating, and we have confirmation with that from the stock sitting here at this 618 level. Now once the squeeze fires or these red dots turn into green dots, that shows that the stock is going to release the squeeze and have a high amount of energy and potential upward movement. Now once these red dots turn to green, that initiated this release of energy, and the stock broke out of this consolidation area here and took off into all-time highs. And with Fibonacci, this allows you to make a strong, profitable continuation swing trading strategy. So thanks for checking out this video. If you want to learn more about that squeeze indicator, I will have a video on that right here. Now, if you want to just learn more about swing trading and Fibonacci trading in general, make sure to subscribe to the channel. And if you found this helpful, leave a like. And if you have any questions, make sure to leave a comment below.